There's a good chance that you've been reading volume wrong this entire time. And I am confident that after watching this video and learning this strategy, that you will never see volume the same way. Now, in my 8 years of trading experience, I've tried everything. I've tried indicators. I've tried algorithms. I've tried different price patterns. And what I've found is my most success has came from volume price analysis, reading price and seeing how volume correlates. As you'll see below, in my videos, I always come with receipts. In the last 3 weeks, I've made nearly $40,000 with proof. This has all been done trading price, trading volume, and using solid risk management, which I'm going to teach you exactly how I do today. Now, before we get into my exact strategy and how I read volume on a day-to-day basis, there is a few things that you need to know and write down to make sure you have the right mindset and information going into being a volume trader. The first thing is, what is trading volume? Trading volume is defined as the number of shares traded in a particular period of time. And simply put, volume can tell us how participants are feeling. Are we feeling bullish? Are we feeling bearish? Volume can be applied to option contracts. It can be applied to equity prices. It can be applied to futures trading. It can be applied to anything trading related, and is actually very important in all things trading related. Now, in addition to what is volume, there's a few myths that we have to cover to knock out of the way. The first myth about trading volume is it tells us if there are more buyers or sellers. This could not be further than the truth. A lot of people think if they see a bigger green bar or if they see a bigger red bar, there's more buyers or more sellers present. False. For every buyer of a share or an option contract or a futures contract, there has to be a seller. What volume tells us is if buyers are more aggressive or if sellers are more aggressive. And by knowing this, we can tell where the momentum is moving, what direction price is likely to go, and how to get an edge in the trade we're about to put on. The second myth about volume is it can be measured without history. That is false. Volume is all relative, meaning that just because we see one volume bar, we can't tell if that's high volume or low volume unless we can see previous volume bars. Now, if we're looking at a daily chart, we may look at previous days, weeks, or months. If we're looking at a 5-minute chart, we may look at the previous 1 or 2 or 3 5-minute candles to gauge if we're currently having high volume, average volume, or lower than average volume, which I'll show you in just a moment how to read that. The third myth about trading volume is it can be a great indicator on its own. That is also false, because without price, volume means nothing. Sure, we can gauge interest, we can see the amount of shares being traded, but without seeing price and how price is moving in accordance to volume, it really doesn't mean much. And the fourth myth about trading volume is it is only used by retail traders. That is likely the biggest myth of all four that I just laid out for you. We are using volume to tell where institutions are getting in, getting out, accumulating, and distributing in price. We want to know where the big dogs and the smart money is getting in or where they're trying to fake us out. And by learning how to read volume and trade volume, we can do just that. It's how I've made over $2 million in the past few years trading. It's how I've made $40,000 in the past 3 weeks trading. And I don't tell you that to brag. Those of you that watch this channel routinely know that. I tell you that as someone who wants to see you win, as proof that it is possible, and to not only tell you but show you that by learning how to read volume and apply it to your trading strategy will change everything for you. It will simplify your trading, it'll better your entries and exits, and it will give you more of a game plan on how to tell if a move will follow through or if a move is a false breakout. So, when it comes to reading volume correctly, there are 4 models that I need you to understand before we head into some real examples of trades that I've taken using these strategies. The first model is when price confirms to the upside. Now say that we have candlestick 1 here to the upside, we have candlestick 2 going further to the upside, and candlestick 3 aggressively pushing to the upside, all into a big area of resistance for our example's sake. Now these candlesticks alone don't mean a whole lot in terms of confirming if this move is real and if it's going to sustain, or if it's going to reverse quickly when we touch our resistance area. How we confirm that is using volume. Now say on candlestick 1, we have this volume stick right here. Now we can't tell much about this because we have no history, seeing what the previous candlesticks looked like, and we can't predict the future. Now say we have our second volume stick here, and it's higher. This is looking good to the upside. We have more volume and more green body here. And on our third volume stick, we have even higher volume. Now when we see rising volume with rising price, typically this means the move is supported by real buying volume, and we want to continue higher. This isn't something that I would personally put a reject on for this level. Now we have some examples a little later that show us when we touch this level, what to look for if we're going to sustain the move or if it's going to reverse, and how to trade that. Now the second example of volume price analysis is to the downside. So say we have this exact move, okay? We have candlestick 1. Let's go ahead and change that to red. We have candlestick 1 here. We have candlestick 2 here, even larger. And then we have candlestick 3 goes even further, right? So we see that, and we want to look at our volume for these. Now say that on these particular candlesticks, we see the same thing. We see rising volume here. We see even higher volume on the second candlestick, and even higher volume. I know these are flip-flop, but you get the point. Even higher volume on the third. This tells me that the move is likely going to continue to the downside. Now, on the flip side of these setups, say that we have rising price in candle 1. I'm going to go ahead and make that green. Say that in candle 2, we see the same thing as before. We're rising up. And in candle 3, we're coming up and we're pushing into that resistance. However, with our volume, it's telling us a different story. So on candlestick 1, we got some volume here. Candlestick 2, realistically, is looking a little less. And candlestick 3, or volume stick 3, we have even less. So price is moving higher. We're getting bigger buying candlesticks, but our volume is decreasing. That's a sign that we have an anomaly forming. And what that means is something is not matching up between price and volume. Now, typically speaking, if I see this happening, which you'll see in a real example in just a moment, I'll start looking for a reversal. Now, I don't take reversals strictly on lower volume and rising price. I need at least 2 confirmations for any trade that I take. But this is a dang good start to seeing, hey, we might be approaching this resistance and we might be able to find a nice reject spot to find the reversal and to make some money to the downside. On the flip side of this, say that we have price moving down. So we're going to go ahead and put price down here so this makes a little more sense. But say we have price moving down here. Let's go ahead and change this to red. We have price moving down further. And on this third candle, we move down even further, okay? But what we're noticing with the volume is a little different. So we have decent volume on the first candle. On the second move down, we have a little less. And on that third candle down, we have even less. This tells me that bears are not so confident in this move down, and there's a good chance that we're going to find some support down here. The move is going to dry up, and we're going to see a reversal for a calls entry. Now, again, there's a lot that goes into these setups. This is a great start on how to read VPA, how to spot reversals before they happen, but there is some key things that we have to watch, from how to read wicks, from how to define these on different time frames. Typically, I use the 5-minute chart when I'm looking for volume price analysis. I've found that to be the most accurate. However, there is times that I'll use the 1-minute chart as well. And now that we have the basics of how to use volume price analysis, let's go look at some real examples of real trades that I took and made real money on. Now, the first trading day that I want to break down for you guys is Wednesday, August 7th. I took 2 trades this day using volume price analysis and made a little over $2,000 in doing so. Now let's see how price develops as we start the day. And as a reminder, I typically do not trade the first 15 minutes of the day. As a volume price analysis trader, I don't have a lot to work with in terms of seeing how volume is developing, how price is developing in the first 15 minutes. So I like to let those candlesticks settle. I like to see price settle. And then as the day goes on, 30 minutes in, 45 minutes in, etc., is typically when I find my best trades. So we see here, price moving, we see a little consolidation at the top of the day, and then a move down. Now, we don't quite make a low a day here. We come, find some buying here, and we start to move back up. Now, on this move back up, I want you to look at our volume bars on the 5-minute chart. What am I seeing here that might make me a little suspicious? We see we're moving down. We have this aggressive push down. However, on these next few candles, we see some wicks up. We failed to touch low of day. That's something key you want to mark down in that first 30, 45 minutes. We failed to hit low of day. And we see some reversal candles. However, what do we notice about this big green candle here in accordance to the volume down here? We see these small candlesticks here with these volume sticks, yet the next big green candle up, we see basically the same volume. Something's not adding up here with the size of this candlestick and the volume down below. This tells me we may have an anomaly forming. On this next green candlestick, we see a little less volume with a lot of wick in here. That shows us that, again, we're not seeing a lot of follow through to touch that new high of day. On the next few candlesticks, what do we notice? Right? We fail to go higher. Let's see how this continues. Now, this is where it gets my attention. I don't take any entries here, but when I see this aggressive sell, that is where I start to look for a pop back up where I can try shorts after we fail to go higher a second time and manage my risk accordingly. So on this next pop up, as we're failing to go higher, this is where I look for my shorts entry based on volume price analysis. We set our stops above that previous high a day, or if you're a little more conservative, below these or above these candle highs. And we want to target at a minimum for our first trim low of day. So we see here price plays out. We fail to go higher again. We enter those shorts. And we see that aggressive push to low a day. That is where we get our first trim. Now on a trade like this, we know that we don't need to exit our position because as volume traders, what do we see? We see an aggressive push down here supported by volume. We see another aggressive push down being supported by volume. And now, zooming out, we want to target either A, obviously this is an aggressive move, but previous day close, or B, previous day resistance. So let's go ahead and mark that out. This is obviously a very aggressive move targeting previous day resistance. Let's see what we get out of this trade moving forward. We see volume confirm. We go back and forth, another aggressive move. We're trying to buy back up. You can see these moves up are being faded with lower volume. It's likely we head lower. We continue to head lower. We move down. These sells are getting aggressive. We move further. We hit second price target. Now, it's very good for us as volume traders to be able to read this 5-minute volume to help us stay in our positions and have conviction in the risk we're putting on. As the day goes forward, I don't hold this trade all the way to the bottom, right? I end up selling on this aggressive move down and this push back up. Now, as the day moves forward, let's fast forward just a little bit so we can get to end of day. We move down. All right. Now let's fast forward a little faster so I can show you what we see at the end of the day. Now, on this second move up here, this is my second trade of the day. Let's rewind to see what happens. Right below this push up. Go here. Let's start it. We see us come down. We have a little slower action, right? This lower high isn't quite as aggressive. Watching volume still. We move down. And as we come back up, pause. Okay, we had an impulse candle here with some pretty aggressive volume in here. We had a previous low in the middle of that impulse candle. So now we're going to look for this area if volume can confirm as a reject zone. We see this candle here, same volume as the previous smaller candle. It reminds me of that opening setup we saw. This tells me right here that this was not supported by an aggressive volume push. This is likely an anomaly and will likely come up, touch this zone, and reverse. So after seeing that, gets my eyes open for puts. We come back up, and on this candle up here is where I enter my shorts. looking for a stop if we close or move above this previous impulse candle wick right here, or we want to target low a day on this. Let's see what we get. And let's go ahead and draw this out to make it a little easier to understand and watch for you guys. So let's go here. We're going to go ahead and target these highs for a stop loss and target these lows, right, for a take profit. We move, we go back and forth, we go back and forth, and we get that aggressive push down that we wanted to see. Now again, I find this setup by watching volume, seeing that we have an anomaly here. This is not supported by good volume, and we're likely going to move back down. Anomaly trading is a big part of what I do. I love spotting higher lows, lower highs, and going with the trend. And a lot of times we find those trend entries by identifying when volume isn't acting in accordance, because we don't want to get caught in a nasty reversal. Now, this isn't a 100% strategy, but it is something that I use very often that keeps me having an 80+% win rate. Now let's go look at a real example of how to find volume confirming in real time. Now, the second example that I'm about to show you is one that I really like because it not only shows VPA in real time during the day, but several other factors that play into this that you always need to be aware of. Now, we'll notice the day we're looking at is Thursday, August 8th. On this day, I made $935. Now, something that I want you to know about me too is that I don't go for 5, 10, 15, 20K every day. I show you what's really possible. I aim for 1,000, 2,000, 3,000 a day. If my biggest day ever is almost $90,000. I've had those big days, but I aim to show you real proven results and what's actually possible doing this. A lot of these guys that you see teaching will be like, hey, I made $50,000 this day, but we both know how real that really is. So, just because you see me with smaller numbers per se, I always like to keep it real with you guys. I'm up almost $40,000 in these last 3 weeks, which for me is incredible money. Last year I made $842,000 with proof. And I'm just trying to show you guys my strategies, how I keep my trading as stress-free as possible, and show you what works for me. So put on a little less risk this day because we've been on an aggressive move down, and trading to the upside, I didn't have the full confidence to put on a lot of risk. So that being said, a few things that we need to know going into this trading day. One, we had 2 key zones from trades that we took the previous day. We had a resistance area around this 523.8, 524. So looking at this, we gap up in the pre-market, and we move into that resistance area. We see an initial sell-off down, and let's watch to see what happens, and so we can play this out together. Okay, we see this open up, no rejects or anything for me. We open up, we see a little movement down. Now, what I want us to look at on this next movement up, we traded the upside this day, but we see aggressive volume off the open. This is pretty typical. I usually disregard this first 5-minute candle, and then a second move, a third move, and a fourth move, but we're not seeing a lot of follow through to the downside. Now on this 5th candle up, this isn't something that I really want to see necessarily off the rip for upside. Why? Because we have an aggressive green candle with not a lot of extra volume on it. Now that being said, on this particular candle, we have the same volume as the previous 3 ones, but there's no wick to the downside. That's what I want you to understand, is price sometimes will go up on lesser volume. So we have to be a little cautious rejecting that. That's why I always want to see a second confirmation, not just volume. Because if you were to take this reject at this pre-market high, just based on volume, you would prepare yourself to about be smoked. So we want to see that second confirmation. After this initial move down, an aggressive, move up. At this point, I'm looking for us to break pre-market high, confirm, and look for calls. Now we play this a little further. On this second and third candle up, we see this move up. We see another move up with no wick down, similar volume. This shows us, hey, this candle was all buying, but I'm still not completely sold on this. Now in Team Bull, we had a nice entry. We entered on this candle with stops somewhere in between this impulse candle here if we close below these pre-market lows. But your real confirmation comes on this third candle up. You see we have an aggressive move up we have aggressive buying volume. This tells us that this thing is ready to rocket. And as we see here, let's go ahead and let's mark out our trade too, just so you guys can see how this plays out. We'll put a long position on here. All right, stops below opening print to be safe. And because of that, we're going to target up to this like 527 area to give us a 2R to 3R trade. Now we have a little back and forth consolidation, and we finally get that aggressive move up. Now, before it happens, I can tell you this. A lot of times when you see that aggressive push up on the 5 minute, oftentimes this now is going to become your area of support, right? We're going to make this our new area of support intraday. We finally broke out. We had that aggressive volume push. Now let's see if we come back down and retest this area and find it as our new support throughout the day. We move up. We keep on moving. We're watching volume. Volume's decreasing here, right? But even on the sell-off here, right? Even on the sell-off here, we get one aggressive move. This next candle shows us, hey, this is not going to sustain. If I'm ever looking for a trend reversal, guys, I'm always looking for two aggressive candles in the opposite direction. So if I were to want to try puts on this next pop up, I'd want to see aggressive candle 1, aggressive candle 2, pop back up, stops above high a day. That did not happen. This candle here, right here, tells us, hey, this is probably going to, use this as support and move on back up. Let's see how we continue. We use this as support, as we knew would likely happen, and we move on back up right here. Right? We're struggling with here. We're trying to move higher. Right? We failed to go higher again. We're coming back down. We're still failing to go lower. There's a good chance that after this consolidation, we see, some accumulation here. And let's see us move on back up. We come on. We keep moving forward. We're getting some aggressive buy candles there. Likely we keep moving on up. And this is what I use, guys. This is how I trade. I look for volume confirmation. I use the 5 minute chart, and sometimes I use the 1 minute in between that. And I look for us to confirm with price and be able to set a strict stop loss. That is how my system works. That is what I am looking for. It's how I've learned how to trade over the past 8 years. And that is what has kept me being able to define my risk, protect the downside so that the upside can come. Now, there is a lot more to this that I can go into. If you guys would like me to make another in-depth volume video on how I add the 1 minute chart, the 2 minute chart, the 5 minute chart, and the higher time frames, comment the word volume below and give this video a like. I appreciate you guys being here. I do my best to give you guys the best quality education on YouTube. Make sure you tap in, hit that subscribe button, and let's keep learning and leveling up together. God bless and have a great day.